This was right after I came home from World War II.
1947, you said. What's up, everybody? We're here today on the Road Home podcast. Today, we're here with Russ Silver. Is that who you want me to introduce you?
That
Russ
is
Silver?
perfect.
Yeah, there you go. So he works with us at Cardinal Financial, but he actually works out of the Melville branch. We're over here in Patchogue. So tell us a little bit about yourself. How long have you been in the industry?
I actually started out as a real estate agent.
Really?
I became a real estate broker out in Brooklyn a little over 25 plus years ago.
Oh, wow, yeah.
Yeah, so when I first got out of school, and I did that for a couple of years, and then I met somebody and started telling me about the mortgage business, and I slowly transitioned from the real estate end over to the mortgage business, which has been good for me because when I talk to realtors, I get it. I know what they're going through.
Yeah, you can identify.
Yeah. And,
all the problems, the stuff that arises for them.
I feel their pain.
Yeah.
You know? and I can tell who's a good realtor and who probably should go back to, McDonald's. But that's, it's nice that I understand what they're going through, which is great.
Yeah,
that's
of course.
how I ended up transitioning from one to the other.
So how'd you get into that?
When I first got out of school, I just started, there was no looking for jobs online. You picked up the Sunday paper and, it's cutting out ads, help wanted. And I found a real estate place that was hiring and
this was when
took the job.
The 70s?
This was in 1946.
You're fucking this guy got him.
This was right after I came home from World War II.
1947, you said.
On the GI Bill, I ended up. This was in the 80s. Okay, I know you like that 80s music, so
why
this
not?
was in the 1980s, and that's the way you did it. You picked up that Sunday paper and you went to scissor and you cut out the ads that you thought, and you just start calling people, and hopefully you got an interview and got a job in real estate. Liked it, like I said, did it for a while, and then slowly transitioned over to the mortgage side. And the mortgage side, I ended up meeting somebody that's actually involved with Cardinal to this day, and he brought me over. Started doing mortgages and really haven't looked back.
There you go.
So you never go back to selling houses again? You enjoy the finance side?
You know what? It's very different. You never know what's going to be.
Never say never?
Future. Yeah, never say never. I still have my real estate license.
Oh, yeah, you keep it?
Don't do anything with it, but I still have it.
You renew it every year?
Yeah, I pay the fee to MLS and LIBOR for some reason, and I just actually paid again $140 yesterday. Well, I don't know. But
just in case.
Just in case.
Someone may come up and be like, hey, I want to buy a house. I want you to be my real estate agent.
Right. It hasn't happened yet, but you never know.
That's funny.
Yes, I keep it.
How long have you been with Cardinal?
I've been with Cardinal now, guess we're going on about 3.5 years.
Oh, there you go. So just right before the pandemic, I would imagine.
Yeah, right before the pandemic. I came into Melville. There was probably a floor with, 70 people in there. And little after I started there, we got an email saying everybody go home. I figured, and I was telling everybody, we'll be back in 2 weeks. I didn't even pack up all my stuff.
Oh.
I figured this pandemic.
Blow over.
Yeah, it'd be nothing, it's really something overseas.
2 weeks to slow the spread, right?
That was it. I said, we'll be back in 2 weeks. I'm not even taking all my stuff.
Oh, God.
I had to come back one day on a Sunday morning when no one was around and, get my stuff out of there like 3 weeks later, because that's when we realized this thing wasn't going away right away.
No, yeah, it was a crazy time, right?
Very crazy. Very crazy.
So you've always been in the real estate agent industry since you graduated school?
Pretty much. I mean, I did at one point when the market crashed back in 07, 08, I ended up getting my insurance license, and I was doing a little life insurance, working for a John Hancock office, actually, and that wasn't for me. But I would still, even though while I was doing that, I would get calls once in a while from people that were looking for a mortgage. So I was referring it to people that I still knew that stayed in the business.
That were still doing the industry.
And then eventually I got pulled back in. You know,
just when you thought you were out.
Just when I thought it was out, they pull me right back in, and here I am now, going on, like I said, 25 something years doing this.
That's awesome. So let me ask, if you could go back and give yourself insight, when you were first starting out your career, what would you tell yourself? What advice would you give yourself?
I probably would have taken some of the money I earned and invested it in real estate. I really wish I would have. I did have one investment property, had a tough time little with one of the tenants.
New York City or Long Island?
In Queens.
Queens.
And I ended up selling it. I got involved with a couple of groups that we invested in properties. I did okay, nothing fantastic, but I wish I would have bought and held some stuff.
Yeah.
Because that's how you really build generational wealth. And I didn't. Now my son, who's a college student, is very focused on that. And he's actually working for a real estate company while he's in school.
Oh, wow.
And getting very involved with the investors and things like that.
Yeah.
So, he gets it.
What's he doing right now? Is he a real estate agent or is he?
He works for a management company actually helping lease out student housing.
Oh, that's
he's
cool.
a student up there.
Where does he go to school?
And Oneonta,
Nice.
upstate. And he's doing really well. And he came to the management company with an idea and said, instead of having a 50-year-old guy trying to show houses to students, let me do it. I guarantee we do better because I'm going to give them a student perspective, and their occupancy rates went all the way up. So he's knocked it out of the park, and he's looking to now follow up with that when he graduates, get more involved with the real estate and investing and things like that. So I wish I had done that when I was younger, because I think it's really a smart move for anybody if you can.
I strongly agree.
Especially
There's always a need
down.
for housing. There's always, right? People always need a place to live. So if you own places, you're going to find tenants. Simple as that.
Yeah, I mean, it sounds cliche, but it's the one thing that they're not building or finding any more of is property.
Can't build more property.
Yeah,
Not
they
yet.
dig more gold up out of the ground every year. They print more money every year, but real estate is limited.
There's a limited amount, right? Exactly. And if you look at over the years how things have gone up in value,
Of course.
people that bought and held have done very well.
Shoot, even people that bought at the height of the pandemic and have held up, they're up a few percent as well.
Listen,
Even with how home prices dropping a little bit this year.
they're still up. They're still way ahead of the game.
Yeah.
If you bought like any time right before the pandemic, I mean, we all saw what happened with houses, in the suburbs where people were fleeing the cities
Yeah.
and realizing,
Rushing.
hey, I don't need to pay $2,500 for a one-bedroom apartment because my commute is going to be closer. I might as well buy a house, build equity in something. My payment may be a little higher, but you know what? At the end of the day, I own something.
Especially with
and now I'm
rates
getting a
being
house
lower.
with a backyard and everything else instead of a one-bedroom apartment
Yeah.
in a house or, in somebody else's house or an apartment building.
Yeah.
So totally different. And, that's what really made the market go insane.
It changes your perspective to home ownership. When you actually own the property that you're living in, you have a different sense of pride that comes along with it because it's yours.
Yeah.
Even at the end of the day, no matter what happens, that's yours.
Listen, you can go to any city, I don't care where you are in the country, go to any city. If you have a condo building on one side of the street and you have a rental building on the other side of the street, same apartments, buildings look identical, you will see the condo building in most cases look beautiful.
Yeah.
Okay? Because people take pride, like you said, take pride in ownership.
Yeah.
The guy that's renting, hey, I'm going to be here for a year. I'm not putting anything into it. I don't really care.
Pack and leave. Exactly.
Yeah, it's a very different thing, and that's one of the nice things about when you own your own place. It's your place, right? You're going to take pride in it. You're going to keep it up. You're going to do whatever you have to do.
It's funny that you say that. People living in the city, there's so many amenities around them that they tend to not stay in their home. But when you have your own property and you can cultivate your living experience, you tend to just want to stay home because you can cultivate that experience in whatever way you want.
Right, because it's yours.
Exactly. Yeah.
And it's funny. One of the things I did a quick little thing on Instagram because I had gotten a call from somebody that had a dog, and their landlord was selling their place, and they were in a panic because they couldn't find another place to rent because they didn't want. It was a single mom, 2 kids with a dog, and nobody wanted to take the dog.
Yeah.
No landlords. And
anywhere that does accept them is way out of their price range.
It was not working.
Yeah.
And she never thought she'd be able to buy a place, and we got the information, we figured it out, and now she's out there looking for houses, and it's going to be her place. I said, you want to get 10 dogs? Get 10 dogs.
Get 100, yeah.
Don't matter. It's your house,
Get chickens.
You don't have to worry about the landlord, And she was in a place that she was renting for a long time. She had a good relationship with the landlord, and then one day the landlord called up and said, listen, somebody knocked on my door and gave me an offer I couldn't refuse, so I sold the house. You got to get out.
Yeah.
That doesn't happen when you own the house.
No way.
So, again, this is, one of the other benefits there are.
TBD pre-approved?
TBD pre-approved.
Oh, yeah,
there you go.
That's it. That's the way to do it.
For anybody that doesn't understand that little joke,
it's not
TBD
a joke.
Pre-approved. Yeah, there you go. It was like a private joke that you guys had right there. You guys enjoyed a moment. That's the pre-approval process that we put all our clients through. We actually put most of our clients through underwriting before they even start looking at a home.
It's huge because now they're going out there with the confidence that, hey, I can really do this. They didn't just have a conversation with some loan officer on the phone,
right,
and they said, hey, I make X amount of dollars and I got this much in the bank, and they hit a button and they spit out a pre-qualification letter.
Yeah, no one can say that you can't afford the house or you don't qualify.
Right.
Yeah, exactly.
Once the underwriter signs off on it, that's it. It's real.
Exactly.
And that's the TBD approval that we mentioned.
Yeah, it puts the
powerful
clients
stuff.
significantly further ahead of anybody else that's just offering, like a generic pre-qual.
Oh, no.
Gosh.
Yeah, it definitely puts them in a better position. If there's multiple
they feel
offers,
confident too.
Listen, if there's multiple offers on a property, a good listing agent, first of all, is going to call the bank that pre-approved them, pre-qualified them, gave them a commit, whatever it is. So when that listing agent calls and they call you, they call me, they call any of us, we can say, hey, we already had all their income documents reviewed. We already had their assets reviewed. And they are approved. They can close in a couple of weeks if the seller's ready. They're going to get the deal over somebody that maybe called one of the big online banks and spoke to somebody for 5 minutes and they hit a button and sent over a pre-qual
without
letter.
seeing any documents, no
Without seeing
reviewing anything.
Yeah, I'm amazed at sometimes when I talk to people and they say, well, I'm already approved by somebody else. And I say, okay, well, what did they do? Well, I called them and they ran my credit. Okay, that's good. So we know your credit is good. And what about your documents? Oh, I didn't give them anything. That's junk, and the listing agents that are good are onto that. They get it. So when they see, a lot of times they see these pre-qual letters from certain lenders,
they know
right away, this may not even close.
Yeah.
Yeah.
So definitely a big advantage having that approval letter, that commitment
Yeah,
letter.
these realtors definitely keep track of how quick it is to close with each company.
Oh,
Yeah, definitely.
So they know the ones that, the offer is not that good,
Yeah, you want if
the time frame is not right.
When they have a good experience with a lender,
Yeah.
the next time something comes in from that same lender, they're going to say, "Oh, I closed a loan with these guys, 3 weeks ago,
Right.
and
The
it was
process
amazing,
was quick,
it
easy,
was
simple, yeah.
right." And
They
now they
updated
want
me
that to happen
constantly.
again. Because you got to remember, at the end of the day, everybody has the same goal, right?
Right.
Get to the finish line, get your buyer the keys, get the seller the check, right?
Yeah.
Right.
So you want to do it as quick as possible, painless as possible, and by getting that TBD approval up front, you eliminate a lot of the heartache.
Let me ask you a question, because I've run into a couple of issues recently with things being so competitive. There's a lot of competition out there. What do you do? What do you offer your client to help make them feel more comfortable? What do you do to retain your clients?
Well, I mean, a lot of the people we work with are first-time home buyers.
Mm-hmm.
Okay, so in that case, I think one of the things that I really stress is education. Okay, I really try to make them understand the process. Okay, instead of just here's the documents, sign here, sign here, sign here, and they have no idea what's going on. Okay, So it's really important, at least to me, because I know this is the way I would want it to be if I was buying a house, is you want to understand the process. You want to know what you're getting into. Not just like sign here, here's an X, sign over here, this is your payment. They got to understand what's going on, what's involved. So I try to educate everybody, and by doing that, I think they really appreciate it. And because now they understand it. So when they go into that closing room and sit down with their attorney to start signing 100 documents, they understand what they're actually doing. They get it, they understand it, which is really important. And then also, obviously, communication throughout the process, right? If it's bad news, you got to call them and try to come up with a solution.
Transparency.
Follow-up game, yeah.
100%. Yeah, you got to have the transparency. You can't be hiding things. If you hit a bump, you better attack that bump. Don't just say, oh, I'm going to stick my head in the sand and maybe it'll go away. Doesn't work that way.
You got to attack right away.
Right away.
Get in front of it.
Because if something happens and maybe the income changes or, whatever it is, or something, they get a blip on their credit, or you got to attack it together with the client, or with their attorney or the realtor, whatever it is, but it has to be a team effort to get everybody to say, okay, now we got past that. Now let's get back on track and get on our way to the closing. Okay. It's very important because I hear it all the time from people.
That's why it's very important to have a good team, everyone, not just us.
No, it's not just us. And it's really important to have that communication, like with the realtor you're working with, with the attorney you're working with. Because again, at the end of the day, we all want to get to that same goal,
right.
To get them the keys.
Yeah.
So you got to all, work together. Something may pop up on title, right?
Right.
So, the attorney's supposed to be attacking it, but if he's not, you jump in.
Right.
We see the title, as, working at the bank, we see every title that comes in. So if there's something on it, if I see a judgment from 3 years ago because a car got repossessed or whatever it is, or a credit card didn't get paid because he was sick, or medical bills, you know what? Go to the borrower, go to the client and say, hey, this popped up. What's going on? Can you tell me about it? Instead of just turning a blind eye. Because it ain't closing with that on there.
Yeah.
So you have to hit these things. And again, like you said, you got to work with the right team.
Yeah.
That's
absolutely.
really super, super important. And again, your relationship with your processor is important, right? You're working, side by side. So if they see something, you work together to try to fix it. The underwriter, and then again, all the outside people, attorney, title company, the realtor. Listen, I keep in touch with the listing agents all the time. When I was a realtor, that was one of the things that drove me crazy when nobody would want to talk to me. What's the status? Did the appraisal come? Can't tell you anything. That's stupid because again, when everybody works together, you go much further.
Yeah.
And everything,
You can push further. You can push.
yeah, if the other side has no idea how you're doing, and then all of a sudden you call them up, you didn't talk to them for 3 weeks, and you call them up and say, hey, the loan's clear to close. They'll be like, well, we had no idea what was going on. Now the guy's got to start packing his stuff.
Yeah.
Where if he knew things were progressing the right way, maybe the guy already has arrangements with a mover and he's ready to go.
Yeah, that's true.
But if there's not that communication and everybody's in the dark, you kind of just like winging it and hoping it closes, which not a good way to go.
Yeah, that's funny. I got a client right now with all of his stuff that's just hanging out in a U-Haul.
God, that's rough.
The sellers, when it came time to close, the seller's attorney wasn't ready. So now the guy's just sitting there with a U-Haul full of his stuff.
Oh God.
Yeah.
But he's living in his place. Where's he living?
No, he's in Florida. So he's moving to New York.
So before he even went under contract, he rented out his current home.
Oh, wow.
So he had planned already, but he thought he would close a few days earlier than we did.
So is he doing a hotel or like?
He fortunately is staying with family. Yeah.
Okay.
Fortunately, he's staying with family, but all of his stuff is just hanging out in a U-Haul.
He's lucky he has at least he has a place to stay.
Yeah, exactly.
Yeah.
Exactly.
I mean, I had somebody that we did a closing about 6 months ago, and everybody agreed, and they all knew that we were getting close to the closing date, and everybody was fine. And then we get to clear to close, and we call up the other side, and all of a sudden the other side's like, "I'm not ready."
Huh.
Well, a week ago you said you'd be ready.
Yeah, you pushed me.
Now they're not ready.
You pushed me.
So our client moved up from Maryland to New York. and had to stay in an Airbnb for like 2 weeks.
Jeez.
Ouch.
So, you know, it was, and that stuff had to be in storage. The moving company picked up that stuff.
So they
put it in a
incurred the
warehouse.
expenses from the Airbnb. They
And the
incur the
storage
expenses
place.
from the storage facility.
Mm-hmm.
Yeah.
No, it's not fun, but that's why, again, you try to keep that communication. Listen, things are going to happen, right? Sometimes people say yes, yes, yes.
Yeah.
And then when it comes time to close, they're like, oh my God, we're not ready. You know, a lot of people are in denial when they're selling their house, especially if it's something, you know, where they really don't want to sell. But
Nobody
they have
does.
to.
Yeah. Nobody
You know,
does.
They have to. Maybe they're
There's
relocating
memories.
somewhere. Right. You know, remember, it's to anybody on the outside, it's a piece of real estate.
Mm-hmm.
But to them, like you said, it's
Home.
memories, right?
Sentimental.
That's home,
So,
yeah.
Yeah, this is where they raised their kids. This is, you know, there's a lot that went on,
Yeah.
and now they're leaving that, and it's an emotional thing for them.
Yeah, they don't think it's going to take 2 or 3 days or a week to
In a way, you know,
pack everything up and leave.
Right.
You know?
It's funny because a lot of times the seller says, "Oh, I want to close quick,"
Yeah, of course.
right? And then when it comes down to it, now they're like dragging their
They
feet
don't even want to
because-
leave. Yeah.
Right. Now they're like, oh my God, what do we do?
Yeah.
You know, like you always hear a lot of buyers get what they call buyer's remorse, right? They're
Yeah.
running around, they see 50 houses, like in the pandemic, right? It's impossible to find a house to
Right.
buy. They see 50 houses, they made 19 offers, they got outbid on, they finally get a house, they get an accepted offer, everything's going ahead. And now they're like, oh my God, what did I do?
Yeah.
What am I doing? You know?
I signed
But
an
sellers
appraisal
get like
waiver.
that too.
What does that even mean?
Right,
You
right,
know?
right. What did I do exactly? I went
Yeah.
how much over the asking price?
Yeah, exactly. Yeah. I waived mortgage contingency.
Right.
What?
Yeah.
You know?
The deals that were being done during the pandemic were crazy.
Yeah.
You know,
exactly.
but people were so desperate, and there was so many more buyers than property that sometimes you gave up a lot to get that house, and then you thought about it after.
Yeah.
You know,
Yeah.
after the fact. Once you're in contract, it's tough to say, you know what, maybe I don't want to put that. I want to get that mortgage contingency back in there. I'd like to get the house appraised. You know,
Yeah.
it's a little late. I'll waive the home inspection. You know, people did it all the time. These are
Lots of
things-
stuff like that. Yeah, lots of stuff like that.
People did it all the time.
Offering $100,000 over asking price, you know, everything
Yeah, I mean,
just to
it's-
get the house.
That's it. That's it. You know, and hopefully all these people that bought are very happy
I
There they
agree.
are.
Yeah, hopefully.
because it may take a while to recoup that. So hopefully they're happy with their decisions.
Every home buyer's happy.
Well, listen, at the end of the day, you know, that's funny that you say that because, you know, we all try to go to as many closings as we can. If it's within, you know,
Right.
a fair drive, we'll go to the closing, right? And very few, I can't even remember, you know, buyers usually walk out with the biggest smile ever on their face. You know, sometimes they're
The dream.
happy tears, right?
Yeah.
I've been to closings where they get the keys and they break down hysterical crying. You know, happy crying though.
Of
you
course.
know? But it's a very
It's
emotional.
quite a step.
Especially, you know, you do a purchase for somebody in their first generation to own a house, where literally they grew up in an apartment renting.
In the city, probably.
Their parents rented, their grandparents, their great parents, right, in the city. And that was it. They just thought, hey, this is what we do.
Yeah.
And now all of a sudden they're buying. I mean, I was at a closing where it was literally, it was a first generation buying, and it was a single mom. And literally, I don't think there wasn't a dry eye in the room. I mean, they started crying. The realtor started crying. The attorney was crying. The seller was crying. I mean, it was just like
Yeah, I've never even
such
thought
an
of that.
emotional situation because they never thought that their family would own a house. I
Sure,
was
it
really
wasn't
like,
the rate that you gave them?
They were crying because of it. Was this in the last 6 months? Yeah. I don't think they were
you know
crying
what?
for the reason you think. No, I'm
yeah,
kidding.
no, listen, the rates now, they're higher than they were, right?
Yeah. Go back
they
to
were-
the 90s, though.
They would listen. Those low, super low, 3%. You know, that was just the government pumping money into the bonds and just to keep the economy going. That was like artificially low rates.
Yeah.
You know,
exactly.
I mean,
people don't understand that, though.
Yeah, like, right. I had a conversation with somebody yesterday. You know, well, my cousin bought last year and got 3.25. Well,
You should have
know
bought.
what?
You're not your
less.
cousin.
Your cousin timed it good. What can I
Yeah.
tell you? I go, but I guarantee your cousin probably paid over the asking price.
By
you know?
$50,000 to $100,000.
So,
Yeah.
you know what? It's all relative. You know,
Yeah.
I mean, look, and again, you're not stuck. This is the one thing that people have to understand. I don't care if you get 3%, 4%, 5%, 9%. At the end of the day, there's no prepayment penalty. So if rates come down or you need to refinance to take money out or whatever it is, you can always do that. You're not stuck with that rate. Yeah, it's a 30-year fixed, but if you, in a year from now, rates drop 2 points and you want to refinance, refi.
Cash out.
There's no penalty. You need to take money out, right?
Just don't become self-employed within the last 6 months.
Or you can just make more money.
Just make more money,
Can make more money, exactly. As long as the numbers work. That's what it's all about. But yeah, I mean, this is a interesting market right now, and we'll get through it. You know, people are still going to buy houses, like you said. I don't care if the rate's at 9%. Listen, when I bought my first place in Queens, I bought a co-op, and I got 10.99, and everybody was congratulating me that I did so well.
That's great
because
rate.
The people that bought that I knew before that were paying 12 and 13%.
Wow.
Yeah.
So 10.99. Now, I paid a couple points for the 10.99. You know, I was a little green. I didn't know what I was doing.
How long ago was this?
This is about 30 years ago.
Wow.
So I mean, you know, here I am out of school, my first job,
Like 91,
and a lot of my
92.
friends were going into rent places,
Right.
and I said, you know what? I started to do the numbers, and I bought a nice little co-op in Forest Hills. I mean, everything was so, back then. They look at the numbers now; it's so cheap, but you know,
What was it worth? Do you remember?
I think I paid, I don't know, like 70-something thousand.
Oh my gosh.
Okay.
Forest Hills.
That's nuts.
He said in Forest Hills.
Yeah.
I bought my co-op. I live in Queens right now.
Where?
Oakland Gardens, so Bayside area.
Yeah.
Mine, I went for 330. Interest rate though was really good, 3.25.
Oh, okay.
So I can't argue that.
Yeah, it's pretty good. It's probably the same payment I had on a $70,000 loan.
Maybe, but oh my gosh, that's crazy. 70,000.
Yeah. Wow. You know, so you know, you put 10% down. So whatever it was, so say it was 75,000, right? I put 10% down. Oh no, 20%. I'm sorry. You had to 20% down. And the guy that got me the mortgage, you know, maybe he banged me over the head. I don't know. I know, but I know it was. Everybody told me I did really well at the time. So, okay, and I think it was an ARM.
Oh,
It wasn't even a fixed rate.
Wow.
Now I'm thinking about it, but it had a conversion option in there.
Okay.
So it was an adjustable rate. It was like maybe a 3-year ARM or something like that, or a 5-year.
Did you refi?
But you had the right to, if the rates dropped, you had the right to convert to a fixed rate and pay only like $500. You didn't have to refinance or something. So
Wow.
maybe I went from 1099 to 899 or something like that, you know. And I thought I was a genius at the time.
Yeah.
There you go.
You know, but again, I bought something. It went up in value. So when I was ready to sell it, you know, I had I had equity, and I sold it for more than I bought it for, and that's how I was able to buy my house when we outgrew the apartment. My friends that rented a couple blocks away, when they left, the landlord said, "Thank you, and here's half your security deposit back. We're going to keep the rest because we got to paint or whatever it is." You know, so again, go back to what we were talking about before. Benefits of owning. You know, like we said, pride and ownership and all these other things. You're in charge, whatever, but also you're building equity in something.
Yeah.
Yeah, exactly.
Which is great. And, you know, if you can do it, it's a great thing to do.
See that, and that's something that I think that a lot of people don't think about when they're first entering into their transaction. People think about, oh, well, it's going to cost me X, Y, and Z just to get into the property.
Right.
That whole down payment, you're investing in a nest egg.
Right.
You're putting equity into a home. So it's like I tend to on my side feel like people don't really understand what a benefit it is to drop $100,000 into the equity right off the bat. You know, obviously you want to keep as much in your pocket as possible,
Right.
because you know what to do with it better than it knows what to do with itself just sitting in your home.
Sure.
You know, but still.
Listen, you know, and you think about all the, you know, the great programs now, right? So you have the FHA, 3.5% down.
Yeah.
Okay. So, you know, if you're buying a house for, say $500,000, right? So what is that? 15, like 17.5 or
17.5,
something,
yeah.
right? So you're putting down 17.5, and you can get into a house. You know, you can continue to pay rent. You know, when you talk to people that have been renting for a long time and paying, you know, pretty high rents, like in Brooklyn and Queens and even on the island, right? You know, you say, well, how long are you renting? And the guy says, well, I've been there for 10 years. And how much are you paying rent?
Let's not do the math.
You know, and then I always say to them, and I always say, I go, you don't even want to know the numbers, you know? And then they start to go, I know. They don't know.
They don't
because
know.
when I throw out
If
a number,
they realize,
when I, you know,
They never
when
would've done
when
it.
I give them a number of over $100,000 in rent, they want to throw up. But I say,
course.
but you know what? That's okay because that's the past. Now you have an opportunity to change that, and let's go forward. You can't go backwards, but let's go forward. It's your decision. You can either continue doing what you're doing, or maybe you say, hey, let's take a shot. Let's see what we can do. Let's try to buy a house. And because you know what? That guy that bought a house 10 years ago, instead of paying rent, he's got a ton of equity right now.
Yeah.
So again, the idea is to, you know, you asked me before, you know, what do I do with my clients? You got to educate them. Really what it's all about. If you educate them, they will see. And again, look, buying a house isn't for everybody. You know, there's a reason why there's 1 million, you know, people renting, right? So it's not for everybody. But those that can do it, when they see the benefits, whether it's, you know, the tax benefits or building equity or whatever the case is, whatever their reason is, they start to understand it more. But again, you just gotta, it's our jobs as the mortgage professionals, that's what we are, right? To educate them, you know, educate them and work with your realtor partners. And sometimes you maybe educate the realtors on what's going on. This is what's really going on in the market.
Yeah, you got to point them in the right direction. They can't just tell you what they want and you go, okay, no problem.
Yeah,
you gotta no, this is the better route to go, and you show them why.
You have to guide them. You know, at the end of the day, any decision they make has to be their decision.
Yeah, of course.
But it's easy to make, you know, what should be the right decision, we'll call it, by being educated and understanding what you're doing.
It's if you have all the facts, exactly.
It's a lot easier to make those decisions when you understand what you're doing, not just out there and saying, I'll take it. Why? Because it's a house. Okay, great. You know, is it the right, is it the neighborhood you wanted to be in? No. Okay. Why are you making an offer? Because I made 19 other offers before and they all got turned down.
You have any idea what the taxes are on the house?
You know, yeah.
No?
Oh, yeah. I mean, it's scary
Yeah,
how
right.
that's always like,
They get whiplash.
I literally have somebody that went into contract last week and I was going over the payment with them. They were like, that doesn't seem right. That doesn't seem right. And I said, well, what do you think's wrong? I go, here's the mortgage. Here's this. I got to the taxes. And I said, and here's your taxes. And she said, well, that's not right. The taxes are $8,000. And I said, you sure about that? I have 10.5 in here. She said, I'm sure the taxes are $8,000. A lot of the houses we looked at were $8,000. I go, well, was this house $8,000? She goes, I think so. I went on multiple listing, pulled up the house. The listing agent had it right on there, 10.5. She was shocked. Now,
That's extra $2,000 a year.
Did her agent maybe could have pushed it, got it into her head more? You know, and I called her agent. Her agent said, 100% we went over the taxes being 10.5. She saw a small house in a different town that the taxes were $8,000, and that I guess is the number that she was fixated on.
Yeah,
is that $8,000, and she didn't get it that every house is different, you know.
Oh yeah.
But again, you know, that's why it's important. We can educate the financing side. The realtors have to do a good job with the house end.
Wow,
But again,
I've never even thought of that. Because you just think about taxes, you think that the dollar amount determines the taxes. For any other purchase, it's like if I'm buying $10 worth of goods at the grocery store,
Right. It's a fixed.
Right.
sales tax is fixed.
Yeah.
Right, exactly.
You know, you don't realize that if you're buying a house in Belmore versus Bayshore, those are two different towns.
Right,
You know, they have
exactly.
different tax
Listen,
codes.
you can even have, and this is where the real estate tax system on Long Island is broken, where you can go down any street, I don't care, pick a town, and pull up the taxes on every house on that block,
all
and they may be
radically
all the
different.
same
All
house.
wildly different. Yeah.
And they're all different.
Literally,
Because
driving through
this guy
Levittown, every
this-
house is the same. And
Right.
They're all different taxes.
Because, this guy grieves his taxes every year. This guy's been living there for 30 years, doesn't even know what grieving the taxes is.
Yeah.
This one has a star exemption. This one was a veteran and is a senior citizen. So he has the other exemptions on top of the star and grieves his taxes.
Yeah.
So one guy is paying $7,000 for taxes, and the guy down the block
15.
is paying $15,000 for the same exact house. So you have to be really careful with that. And again, if there are discounts they're getting for being a senior citizen or whatever, if you're 30 years old buying that house, you better understand you're not getting that discount.
Yeah,
they're paying
exactly.
$7,000. It's going to be, but even though but they grieved it, the grievance stays, but the discounts with the star exemptions and stuff goes
go.
away. So they're paying $7,000. You're going to go to $11,000. Okay, but it's still better than the guy that never did anything. That's $15,000 down the block. So it's really important. And I always tell people, like, what's the payment going to be? If I find a house for $500,000, what's the payment going to be? Right away, I say, well, it depends on the taxes. Well, what do you mean?
Principal and interest are X,
Yeah, I can give you the mortgage portion,
but your mortgage payment.
but the taxes can really change what you can do.
Yeah.
And and then if you're in an area where it's a flood zone, you're going to have flood insurance. That's another expense that people don't factor in sometimes, especially first-time home buyer. They don't get it. You're looking by the water. It's very nice, but you may have to pay an extra $1,500 a year in flood insurance.
Yeah, exactly.
So that can change things as well.
I want to just clarify that for anybody that's watching that doesn't understand what we're talking about.
Sometimes I get a little ahead of myself. Sorry.
No, well, we're in the same industry and we know the language and everything like that, So when calculating a mortgage payment, it doesn't just have the principal and interest. It also has your homeowner's insurance, taxes, any other types of insurance that you're going to have on that property included in the base mortgage payment. It's not just principal and interest, your mortgage payment. Now, we can factor principal and interest. Like you said, I can tell a client what the principal and interest is going to be on a $500,000 home. That part's easy. But the taxes and insurance are going to be different for every single property in every different town, the entire country.
Right.
Like you said, every house on the street, it's going to be
Could
different.
be different.
Exactly.
Be different,
Exactly.
It depends on what that homeowner that's selling, what they've done.
Right.
It's funny. It's a lot easier. You go into like Queens, right? And you look at a single family houses in this area. Taxes are going to range from $4,000 to $6,000. It's a lot easier. Okay?
Yeah.
Long Island is very
wild.
different
It's
than
wild.
most other places in the country,
Yeah.
where the numbers are all over the place.
You've got some towns and some areas in some towns where it's like 4,000. And then you have another, like one town over,
Yep.
it's 22. You're
Right.
like, what?
A lot of times you'll see, like, if you're near Hop Hog, they have a lot of industry there.
Mm-hmm.
So those businesses pay tremendous taxes, keeping the homeowners' taxes a little lower.
Lower, yeah.
Right. So you can be in an area like that. You can go 10 minutes down the road and be in an area where there's no industry. It's strictly the suburbs and houses, and those taxes are going to be a lot higher.
Yeah.
Same house.
The
Build
school
two
district changes
neighborhoods.
everything too. Yeah, everything.
All that changes, and every year, they vote on the school budget, the people that live there, and how much they're going to increase it, will affect your taxes that you pay. But again, good schools is going to bring your values up, right?
Yeah,
A
exactly.
lot of people, if they have kids and they're looking, right, what's the first thing they're doing? They want to go, I want to be in a good school district.
Everyone
Okay,
says that.
well, do your research, go online and see what's a good school district, and then you start from there.
I love telling my clients to ask the realtor about the school district.
Oh. They're not allowed.
They're not allowed. Yeah, they're not allowed to talk about the school district at all.
They're not allowed to say anything. They can
Yeah.
direct you to the websites.
Exactly.
And this has every website, every school district on Long Island. You can see how it's rated, and that's it. I'm not allowed to say good or bad.
It's a funny inside joke,
Yeah.
We get it.
Yeah. Because I've seen the look on people's faces, agents,
Yeah.
especially like if we help out at an open house, where they'll call. A lot of times agents, good agents will try to have a mortgage person at their open houses, So if people have questions, they can answer questions about it. And I've seen agents ask that question about the schools. Well, how are the schools? And you can say, well, it's this high school, it's that high school, and this, and it's this elementary, and this is the middle school.
You do your own
I didn't
research.
ask you the names of the schools. I want to know how are the schools.
Yeah.
Can't say anything.
There's a website that you can
Yes.
go on.
Exactly. But do you guys do any open houses at all?
Oh yeah.
Okay, that's good. Yeah, it's a really good thing to do. Because,
You still do them?
Yeah, still do 'em. I was at one last weekend in Merrick. Weekend before I did one for a renovation loan. It was a foreclosure in
Oh, wow.
Roosevelt, and house was pretty beaten up, and the agent knew it would be a good idea to have someone there that understands how to do renovation loans. We do the 203K loan here, and I was there basically answering questions the whole time. The agent would give a little tour. You see all the floors all banged up. There's holes in the walls. Kitchen cabinets are hanging off, the ones that are remaining. The heating system, you can see somebody had broken in at one time, stole some of the copper pipes.
Oh man.
House was pretty beaten up. But so I was there to answer questions. Can we get a loan and fix this stuff up? And the answer is yes. We'll give you the money to buy the house, and we'll give you the X amount that you need to fix
For
it
repairs.
up, to do the repairs. And
Yeah.
you just have to come up with 3.5% of that total amount. So if the house is 400 and you need another 100, you're putting down 3.5% of 500,000.
So
And you're
like
going to
we're
get a
talking about
house
17.5.
fixed up. That's going to be the way you want it fixed up. You'll do the kitchen the way you want it, which is
Exactly.
great. You'll do the bathroom the way you want it. You know what? You want to rip out those, that crappy carpet that's in there, or take the paneling off the walls, and you do it the way you want it. We'll give you the money to do it, and you're going to have a beautiful house, And I've seen it where people have gotten into neighborhoods that they could not afford a fixed up house, but they had vision, and they went in, got the house for a really good price, borrowed the extra money to do the renovations, and now they have a house that has instant equity. The day they finish that work, the house is worth so much more money
Absolutely.
because they didn't run away, right? A lot of people walk into these houses that are a mess. Like people all the time say, "Oh yeah, I want to buy a foreclosure. Oh, I want to buy a fixer-upper." And then when
Challenge,
they walk
yeah.
in, they run the other way. But when they hear that, hey, there's a loan out there that we can do, that we can get the money to buy and fix up, now it starts to make sense. If I can get this thing for a really good price and do the work. We have one closing tomorrow, actually, Westbury, a foreclosure. House has probably been broken into at least a half a dozen times since she went into contract.
Oh God.
But there's nothing to take anymore. They took the copper pipes already,
It's probably just teenagers drinking.
Yeah, I don't know if they're just
Something
hanging
silly.
out in
Yeah,
there
exactly.
or whatever, but houses, right now, it's boarded. They finally decided to board it up. The bank should have boarded it up a while ago. Because these guys, they had a padlock on the front door. These guys would do is kick the front door in, it was ridiculous. Then they'd come, they'd fix it and stuff. So, but this woman is getting a house with it, she's getting the house for probably, I'd say at least $200,000 less than the market for a house that's done, okay? And we're giving her, she needs about $75,000 to fix it. So she's gonna have $125,000 in equity the day she
Right off the
moves
bat,
in.
yeah.
The day she moves in, she has $125,000 in equity. She did it with the FHA loan. She'll make payments for 6 months, and then we'll refinance her into a conventional loan, and the mortgage insurance falls off.
Yeah.
Because she has all that equity.
That's incredible.
So-
That's awesome.
That's and it's a beautiful street. I went. She was so excited when she found. I went to the house to see it with her, and not as a real estate agent, but as her lender.
Yeah.
Because you do these little things, and this is they appreciate it. And we went to the house. Every house on the block was beautiful, nice landscaping, everything else, and this was the one house that was like the blight. That we looked at this house and it was like, oh my God, this is terrible. The neighbors are going to be thrilled.
Yeah, absolutely.
Absolutely. Yeah.
I mean,
All the values
imagine
go
living,
up.
if you're living on both sides of that house. 3 a.m, you hear kids probably partying there, whatever it is. Now, there's going to be a nice family moving in, so it's good for everybody.
That's great. That's
yeah,
great.
it's really good. It's a great government program. More people should take advantage of it.
No, I agree with you. So let me ask you one more question, just
Sure.
to bring everything together and finish up. So I asked you before we started, and I'm sure you've thought about it. When was the last time that you thought about giving up in this industry, and why didn't you?
Listen, it's not an easy business, okay? You're dealing with all types of personalities. You're dealing with the buyers, sometimes the sellers. You're dealing with, 1, 2, 3 attorneys on every transaction. Most of the time, 2 realtors on every transaction, a title company. And sometimes it gets difficult. And you know what? And there's times when people get upset. And whether it's your fault or not, you're sometimes the fall guy.
Yeah.
Right? Because you're the one talking to everybody. So if there's a problem, they got to vent on somebody.
Yeah.
So yeah, there are definitely times where you say, you know what? I don't want to do this anymore. I don't need to do this. I'll go do something else. I'll go to Target. They're hiring. Hey,
Amen.
I don't need this aggravation. But then you think about it, and you know what? There's a lot of good moments in this business also. Like I said,
Actually helping people.
Rewarding moments, yeah.
this is one of the few jobs where you can make a good living and you can help people. You're not like convincing people to buy some stock that may bottom out tomorrow and the guy may go bankrupt, your client may be wiped out, right?
No, yeah.
You're helping people achieve the American dream, right? That's what it is. The American dream is home ownership.
Yeah.
So if you could be part of that and really change people's lives for the better, it's not so bad.
That's what keeps you going. That's what keeps you going.
That's the only thing that keeps me going. Because trust me, I probably a couple times a week, I question, what am I doing? I go, I can't.
I feel that.
I cannot deal with this person that I'm dealing with, And then 2 hours later, you're like, you know what? It's not so bad.
Yeah.
And you just try to keep moving forward. But that's my story, man.
That's perfect. Well, Russ, look, it's been a pleasure. Thank you for coming by.
No, I appreciate you guys having me in.
Yeah.
This was fun. And
no, we did.
I love coming to your office.
Good.
So
Yeah.
it's great. It's good
Well,
stuff.
thanks everybody for coming. We'll see you next time. All right.
Thanks, guys. Appreciate it.